Friday, September 9th. Market analysis, Stan Ehrlich. It's currently almost 10 o'clock California time. Sorry for the late recording. I just got out of an hour and a half power blackout. Something went wrong. Well, we got the rally I was looking for. I started talking about oversold a little over a week ago. Market dropped down a little bit more early this week. Tuesday, remember Monday was a holiday. We gapped up this morning, no less, which is great because now we're probably going to come back down to yesterday, Thursday's high, September 8th, and close the gap. Gaps are almost always closed. Remember, they're like a black hole in space. The market tends to close the gap sooner or later, and it's usually sooner. So I like the fact that we have a gap. Let's try to pinpoint a little more accurately where the market's going to stop rallying if it hasn't already. We have had now a couple of hours of sideways movement after the initial morning gap up and a little dip. Came up to about 406 and stalled out slightly above 406. But it looks like it has a chance of popping up a little bit more. I wouldn't be surprised. I said 406, 407 plus or minus a couple of points. So I'm going to get a little more accurate here. I think 407 to 410 is the more likely price level at which the spider is going to stop rallying and start to turn down. Now this is very significant because if I'm right about this rally high, I think we're about to see in the next 1 or 2, maybe 3 trading days, could be, should be, I think it's going to be the beginning of the next wave down, the next leg down, and that's going to make this, that's going to challenge the lowest low for the move, which has recently been, and my cursor won't behave, just a moment, the low that we made on Tuesday, whatever the price was, looks like 89-ish, and my cursor will come back to life. There we go. 388.42. I don't think that's going to hold, and I think the market's going to drop below that. I'm going to start talking about this for the very first time, and it is very, very premature. Ladies and gentlemen, we have a bottom of some significance in June. Now it's broad numbers and broad time spans. That was the bottom of a head and shoulder bottom by itself, and it worked great. My forecast was 430. It got up to 431 and change. A few weeks ago, topped out. That's the objective right there on the pattern. Said and done, gone, history now. But what happens if this low that we just had on September 2nd, and this goes for, the timing goes for, and the pattern goes for the DIA, the QQQ, and the Russell 2000, as well as the Spider. All of them may have a potentially large one-year head and shoulder bottom building. This is very premature. We have to see how these bumps and grinds in the market pan out into October and out of October. But I think I've got a rather idealistic combination coming up here. We already have one low. I'm going to call it this low. It's a little bit too soon in time, so the amount of time since the June low should have been maybe October, but here we go. Maybe this low is not this low, and it's one of these two lows, because after all, I am expecting lower lows coming up in October. The October lows, I thought, and I still think it's quite plausible, are going to make a challenge of the lowest low for the whole move. That means a possible double bottom, I don't know. Or it's going to break those things and drop down to my long-term downside objective, which is in the low 340s. 20-some points below the June low. But this story about a head and shoulder seems to fit, but it's very early again. These two lows, I think, are part of the formation, and I think those two lows, this one represents one of them. You don't have to have exact symmetry on head and shoulder tops and bottoms, but this looks damn good. Next week we come down, we have a low, maybe there's a bounce, kind of like this going backward in time, a bounce up and a bounce up, not too much. Another low in October, and that would match with this, and that would match over here, which is not quite October. It's another couple of weeks to the right. So let's say about here. Yeah, that's about right. And that would match with this timing wise. Now we have a possible complex shoulder on the left, and maybe we're developing a shoulder on the right. Again, way premature, but I've seen these things happen many times. And if I don't say something early, then you won't believe I saw it in advance. I'm not saying it's going to have a head and shoulder. I think there's a possibility. Right now I'm just plain bearish. I'm looking for a test October. Probably the June lows are going to be tested, if not broken, by October. Only 1 month away. I'm bearish, very bearish. Long-term objective so far has not changed at 340-ish. All right, enough said about that. We're going to come down and close the gap. Here's the gap in the DIA. All of the indexes have popped up this morning, leaving a little gap behind. Pretty idealistic. The question is, have we seen the rally high already? And I can't answer that. Maybe it got up into the area that I thought it was going to get up into, and it's starting to go sideways. So I would look definitely for a potential downside breakout of this little trading range this morning under these lows or that low, and this is the QQQ. That would probably send it into new lows for the day and maybe start to close the gap. But again, it looks like we could even have a little bit more strength in the meantime, some more upside follow through. So I have some problem with my PC because of the blackout that I just got out of for an hour and a half. Thank goodness I can still make my recording here this morning, but a little late. I'm going to go to the futures charts. I'm just scanning through the charts real fast to see if I find any red or green bars for today. And that would be a bullish or bearish Ehrlich reversal. And I have 2 days ago, and it's working just great, one in platinum. And of course in the YM NASDAQ futures had a bullish engulfing. By the way, so did the S&P E-mini futures have a big bullish engulfing. And my code is not working, but the date is 9/7 for the ES S&P 500 E-mini had an official bullish engulfing. Not only that, very close to the low of the day yesterday, our bullish signal was filled, and we are long the NASDAQ and the E-mini from almost the low of the day yesterday. Again, I'm sorry, the code's not working correctly at the moment. I have to fix that. It may take me a while. Thank goodness it's Friday, so I can get to it and not have to worry about the next business day. Now, crude oil, I was expecting to see a little bit more weakness to help the rally in the S&P, but I got my rally in the S&P. Now I really don't care too much about crude. It's going up a little more than I expected. If it keeps going up more, which I thought it might not, looks like it had a breakout to the downside and got a little oversold. If it keeps going up more, that's going to be bearish for the market. Higher energy costs and interest rates. If we had a move down into, whoops, I did that inadvertently. I'm going to interest rates. The 30-year long bond did pop up a little bit, therefore rates went down a little bit, but it was so small it was not even countable. It probably didn't hurt my rally in the S&P, which again, I got what I wanted. I just thought the interest rate futures would rally up a little bit more than I expected. So they didn't. I got a great sell signal on the top of the bond market. I got a great buy signal on the bottom of the bond market. And I got some other really good signals along the way, but the last two of them were Super good. There's a buy signal that did not work. All right. Here's the October low history coming up. 80 to 90, low 90s percent of the time in the last 30 years we have seen a low in October or extremely close within a couple of days before or after October. The little green circle with the arrow in it is pointing to the exact low. This is weekly data, so it could have been Monday, could have been Friday, or anything in the middle, but the weekly low was either on time or slightly late a couple of years ago. It was great last year, very adequate the year of 2019, and again and again and again over time we have seen many different turning points back up again in October. I love the October low. It's been very good to me over a couple of decades that I've been looking at it, researching it, using it. We'll see what happens this year. No guarantees. Past performance is not indicative of future results, and hypothetical returns has some limitations. That typical NFA CFTC disclaimer. Okay. I really don't have too much more to say this morning because I'm unfortunately lacking some of my signals because of the power outage and the problem that's caused with my code. I hope to fix that very soon. But the take home here is we got the rally I was looking for in the stock market indexes, and we left a gap behind in all of the four that I watch on a close basis. And I think we're going to see, probably not today, but early next week, Monday, Tuesday, the gap closed, and maybe it won't hold and keep going down. Next week, I think, is mostly going to be a down week. My rally high is, are we making new highs right now? I think it's close, not quite. Yep, close. So I think that the 407, maybe 8, is not out of the question at all. Keep in touch. Thanks for listening to my recording. I'm going to start using as soon as I can Ninja charts. I'd love to get the strategies working and the indicators working in Ninja Trader. Thank you very much. Have a great weekend. Stan Ehrlich signing out.